live. Like I said, I've got a few minutes where I thought I'd share some of the things I'm seeing on the markets at the moment. And as I mentioned before, I've got a Telegram channel on which you can have a look at things as well, the daily updates. Um, so, just wanted to let you know on those things. And I'm going to be doing talks tomorrow on investing, and I'm just replying to them. Anything earlier, e.g. Ask me any questions you've got, and that'll be great. Also, like I said, on the Telegram channel, what I tend to do is I drop PDFs of reports that I'm seeing from, say, Goldman's or whatever else. So if you're looking to build up your investment knowledge, that's always a good place to have a look at things that I'm posting and that I'm seeing at the moment. The biggest issue people have got at the moment with the market, I'm just looking at my screens right now, is it's expensive. Yes, everything's expensive. I'm going to go through, there's about 9,000 stocks listed on the UK markets and the US, which includes global companies as well. I'll be running through some of the databases that my team have sent me, because we do that at the end of each month, and we're by the end of the first week of the new month. I like to look at that data and see if there's anything which stands out. I suspect it's going to be a case of, if anything, toe dipping into one or two stocks. Otherwise, it'll be just holding on to what I've got from previous months and previous weeks in any event, because rightly the market is rather expensive. I'm not in the business of sort of speculating and throwing the dice. Were I to do that, and sometimes I might do what's called a FOMO trade, which is fear of missing out. For instance, Bitcoin, Ethereum, Ripple fall into the FOMO trades. And I've lost 90% on Ripple. So let's be absolutely clear, when it's a FOMO trade, we're not talking YOLO FOMO. We're talking whatever the acronym for losing 90% of your bloody money is. Thanks, Ripple. To the extent which I was sort of somewhat intrigued at why that I met these guys in London about it, and said to them, is there a correlation between Ripple and XRP? XRP being the coin and Ripple being the company and the language. And the language is useful just as blockchain is useful. But the coin, he said there's no correlation between the coin and the language. The use of the language for transmit money, the experiments that the Bank of England and the financial regulators are doing on using Ripple as a language to transmit funds is completely uncorrelated, unrelated to the coin XRP. So anyway, that was my experience with Ripple. We'll hold it for 10 years. I mean, it was throw the dice at it in any event, and that's how I look at it. Beyond that, I've got nothing interesting to say about crypto. Does the expensive vanilla price of the USA, UK equities make emerging markets look more attractive? No, I don't tend to pick by geography. I treat all companies the same. It's a bit like this. I think of companies as individuals that I'm interviewing to hold my money as custodians for it. And because they're holding my money as custodians of my assets, I don't care if they happen to come from Vietnam or whether they come from America. I need to look at the same set of things: cash flow, valuation. By valuation, I mean share price relative to profitability, profitability growth, sales growth, cash flow I've mentioned, dividends as well, because there is research to show that dividends, earnings, price, earnings growth, sales growth, all impact share price movement. However, the relative impact each one of those factors have varies over time, which is why investing is difficult, and you can't just look at one thing. You have to look at all of them, and they all vary in their importance over time. But we know those are important, all other things being equal. So geography is less important. I mean, so no, you're wrong. Geography is really important. For instance, last year, Chinese companies did really well. It's not because they were in China per se, it's because they met valuation, growth, income, cash flow. In other words, the same criteria, it just so happened they were located in that geography. You might say, well, therefore, geography was the reason. No, because there were a lot of companies from that geography which didn't meet the criteria. So as I say, I sometimes tongue-in-cheek say I'm not racist in my stock selections. I will look at valuation, i.e. the price of the share compared to its profitability, profits growth, revenue growth, income, i.e. dividend yields, and cash flow as well. Alpesh, going to LSE to read economics. Congratulations, it's September. Hope to break into IBPE. Love your vids. Thank you, and good luck with that. It's funny because obviously I'm in private equity. I have an asset management company. And you know, these are that, accountancy, law, medicine, they're all solid professions. Do remember the world is shifting towards technology and startups and scale-ups, and you know, there's banks like Revolut where people might say, well, actually, I want to have a look at that field and not just Barclays, for instance. So, you know, you've got more choice now, let's put it that way. So the broader macroeconomic implications are less of a factor than when you invest. That's right. I'm very much bottom up. I'm looking at the specific company as opposed to top down. Top down is which country, which sector, and then people try and pick off those. I don't like that as a process, because think about it. If you were picking humans, which is what you are, a company is a collection of humans after all. If you're picking humans for a job, would you say, well, he's Indian, so I'm going to be biased towards him and pick him, or he's white, therefore I'm going to give him the job? You might, but we don't tend to do it with humans, so I don't see the reason to do it with companies. So what I'll do is I'll say, well, Microsoft hits the marks on valuation growth, earnings growth, income, whatever. PayPal, Square I own, CDW I own, Cadence I own, and so on. I don't actually know what the makeup of the nationality and ethnicity of those groups are. And also there's another reason. Take something like a Costco. Is it in the retail business or in the technology business? Is Amazon a retail company or is it a tech company, etc.? So it's very difficult now. Sectors are porous, so that's another reason. And it just doesn't make sense for me to say I'm only going to pick China or I'm going to pick a bunch of Chinese companies, because markets tend to be correlated highly. We've got a whole load of questions, so I'm just going to answer these very quickly. Thoughts on index funds? Let's put it this way. It's better than a bank account, but there's more risk. So the rewards are better than a bank account, but there's more risk with index funds, okay? It's better than nothing. If you can develop the skills, and I've put a whole bunch of free resources on my links in my biog, then investing in individual stocks can be better than an index fund. But an index fund, for the vast majority of people, will probably be a safer bet. What I tend to do, and people sometimes say, okay, yeah, but you know, you talk about all this, can you beat the index? It's really simple to beat the index. I've triple leveraged S&P 500. Does that mean I beat the index? Yeah, because the index tends to be, over the long term, positively skewed. Just look at the history of the S&P 500 since the Second World War. It's 10% per annum on average, but it's never 10% on any given year. Some years it's more, some years it's negative. So if you do triple leverage, guess what? You're always going to beat the bloody index because it's positively skewed anyway. So I find those responses, so sometimes people ask questions like that and it's a bit idiotic. They think they're being clever. Could you beat the index? You know, even a monkey with a keyboard can beat an index. You just do, you know, double leverage the index. There you go, you've beaten it. You go, no, you won't beat it when the market's down. Yes, but it's positively skewed. We know the equity indices are positively skewed over the long term. And for those who want to beat the index every day, every single minute of every second, no, nobody does that. Because you'd need to have a time machine and a crystal ball and some form of witchcraft as your religion to be able to beat it every second of every minute of every day. And that's not what the game's about anyway. So it's as simple as that. Platform to trade. For retail clients, and what's called PA trading, personal account trading, I use a whole selection. You can probably see my books over my shoulder. I've been writing books published by the FT since I was in my 20s. On trading online. So don't buy the books because they're out of date, obviously. And so ever since then, I've used a variety of brokers, and pretty much every single regulated broker you can think of I've used. So everybody from an E-Trade to a Schwab to a TD Waterhouse to Interactive Brokers on the trading side, on a personal account basis to an IG, a City Index, whatever. On an investment basis, every investment account you can think of. So Barclays, Stockbrokers, Halifax, HL, AJ Bell, Free Trade, all of these. But that's because I'm in the business of wanting to know which are good and which are bad and so on. And really, they've become much of a muchness nowadays. So there's no great platform advantage, I find. to be honest. It used to be the case they give you lots of great freebies, and they still do, but there's information overload, so I don't really care about that. Right, what else have we got? Hi, Alpesh. No. So now, hey, Alpesh, any advice in choosing a university? Currently hold an offer from Warwick and UCL. I think in terms of brand names, I had a sister who went to Warwick. I had a business partner who set up the private equity fund with me who went to Warwick. So I do rate it. However, in terms of brand names, UCL is a bigger brand name. And I would say go with the bigger brand name. As I've got older, I've got a bit wiser to brand names. Excuse me while I'm speaking to you that I've just got to tick off a couple of things whilst I'm talking, I'm afraid. I just want to approve a couple of stuff. So I'm afraid, put it that way. How is programming being used in banking hedge funds? Well, you employ people. So I learned when I was about 12 years old, assembly language. Do I use it? No. Do I know how to code? Not in Python. Do I need to? No, I need to know how to hire somebody who can do it. So you'd hire somebody to program. God knows what they do, but they do, magical stuff. Programming's good in this regard. It's like mathematics. It's good because it develops your thinking. You can't BS mathematics. If you get you can edge your words in English like, well, one might think it's possibly the case. You can't do that in maths and programming. It's got to be right, accurate, or it's bullshit. And that's why it's good. It disciplines the brain, but you don't need to know it unless you want to be a programmer, unless you want to be the IT geek, which is fine to be one of those. Hi, Alpesh. How do you think the COVID bailouts are going to affect the UK economy and inflation? We're not seeing much sign of inflation at the moment. From what I understand, we're going to get I'll give you a great insight into this. I was lucky enough to have lunch at Goldman Sachs Asset Management with their then chairman, Jim O'Neill, and he was, for some reason, of all the people around a table of 12, he was seated next to me. And I can assure you there were people with more money, more firepower, more age, more experience around that table he could have sat with. But I don't know, maybe it was random, whatever reason, he was sat next to me. And somebody asked Jim this about 10 years ago now. And they said, Jim, do you think the market's what's the long-term outlook? He said, I don't know what it is beyond 12 months, but I can tell you in the next 12 months. And I love that reply because it's right. And if somebody as powerful as him puts it that way. So I don't know what's going to happen beyond 12 months, but if I was putting probabilities in the next 12 months, I'd say in the next 12 months, I'm bullish because there's a lot of money chasing the markets. Do I care that it might be inflationary 12 months from now? Well, let's reevaluate that in 12 months' time when we've got more clarity. But the longer the time frame you're trying to speculate on or forecast, the less likely you're going to be right. So why would I bother? After all, I can review my holdings in 12 months and I can change my views. And it's better to be in that position. So I'd say in the next 12 months, I remain bullish on equities, but they're a bit bloody expensive at the moment, which is why I'm glad I bought a whole bunch last year, if you see what I mean, and earlier. And I hold for 12 months and then review and then buy a new batch. Hi, Alpesh, how does Joe Biden's presidency affect the global economy and the stock market? Well, he's spending big bucks. He wants to leave a legacy and the clock's ticking because he's old and he wants to be FDR and have a new deal, which means a lot of money going in the markets, which is good for people like me and you, presumably, because it means more jobs. He's created more jobs in the first 100 days. And let's not look causation and does he get to take the credit? I don't care about that. But what I'm saying is there's more jobs created in his first 100 days than I think for any president since God knows when. So that's good. I like more jobs. And you might say, oh, it's not good, Alpesh. More debt, more inflation. Yeah, actually, I like people being happy and having jobs, and I'll worry about the next thing in the next 12 months. So on that basis, I'm pleased with that side of things. Having said that, the market always has a way of putting you on your ass when you think, oh, it's really clear, lots of money going in, stocks are going to soar, and then it sort of brings you back down to earth, doesn't it, and proves you wrong every time. Looking at some more questions, you might have to retype them. Thoughts on what platforms? Crypto to the moon. I know I keep saying that as well. Crypto to the moon. Why not? Elon Musk says it. I think it's crazy, but there you go. By the way, my view on crypto as a currency is this. Governments, and I used to be a barrister, governments do not like currencies to be debased. What I mean by that is they don't like crime around currency. So whether it's fake notes and this is really telling, you need to understand this about political culture and how ingrained it is. And this is what the crypto to the moon people don't know. There are two offenses for which, on a first offense, you are highly likely to go to prison. Okay, one is perjury, and you might think, why? That seems ridiculous. It's such a minor thing. Nobody's really harmed. It's because it attacks the legal system. Okay, perjury. The other one is counterfeit notes. Now, no, murder, you'll go on a first offense. Yeah, you're right. Those are harmed to people. I'm talking about where no specific individual is harmed, right? There are two offenses where you're more likely to go to prison on a first offense. The other one, like I said, counterfeit currency. And you might think, why counterfeit currency? It's such a minor thing, £20. Remember the whole Black Lives thing sort of exploded and accelerated again. It was around a $20 fake bill. Counterfeit currencies, the legal system tends to be very strong, come down heavily on, because it debases the financial markets. Crypto, over my dead body, will they let? I can tell you, they're not going to let it become a legalized currency. Not just because of the reasons Charlie Munger said about extortion. Well, you can use normal currency for extortion and for blackmail and for money laundering. But this is something they don't even have control over, and anonymity is part of it. So, well, Pound Coin has anonymity or whatever. You don't know who owns it. It doesn't have your name on it, Albersh. Yeah, but they don't want a whole brand new headache. So I can't see any way that's going to happen. They might solve the problem, though, because it is useful using, for instance, Ripple language to transmit capital more quickly. They might come up with something I've not thought of. I just don't think it'd be Bitcoin. Bitcoin might benefit from what it is. They might come up with Bitcoin government approved, for God. I don't know. What I'm saying is, I'm not saying it's going to be Bitcoin as it is. It won't be Bitcoin in this manner. It'll have to be some other way. And they might come up with government coin. I don't know. They are. I know they're looking at these things, and they're not in any rush. Why should they be? So, and that's why I have a FOMO trade in crypto. I'll just hold it in case something amazing happens, but it might not. It's like people saying what was it? About 100 years ago, there were 900 car companies in the US, 900. 10 years ago, there were about 3, and 2 of them went bankrupt. So just because some sector is hot doesn't mean everybody gets to make money. How do salaries compare in investment banking versus hedge funds versus asset management? I think it depends. It depends on the obvious things. If you're at the peak, you make loads. I don't know how to answer that. I think salaries are good in all of those 3 sectors. I think they're pretty good as well. So I'm going to do a talk at 2 p.m. What's the best title to use? Perfect. Tomorrow, 2 p.m. Can you do an investing talk? I certainly can. Perfect. Great investments now in a hot market. Right, there we go. Right, now, ESG funds. Sorry, do I accidentally keep moving? Yeah, I am moving my filters, aren't I? I don't mean to do that. I'm not that vain. Somewhat vain, but not that vain. It's gone off now. What macros affect currency strength and weakness? Investopedia is really good on that. It's a free website, Investopedia. They've been around for over 20 years. So the macroeconomic factors affecting currency movements make me sound like I'm at one of my economics lectures again at university. So I'm not going to bore everybody with that. Are you trying to make me lose TikTok followers? But have a look at Investopedia. It'll tell you a whole bunch of things. We ourselves, when we are trading, we use trends. We just follow trends. So we don't actually care whether it's interest rates, budget deficits, confidence in the economy, political risk, all of these factors which might affect it, current account surpluses, deficits, and so on. We just look at the trend price movements, which is what a lot of trend following hedge funds do as well. They look at trends because I like a simple life. I'm just keeping an eye on a few things, on things as we speak. What's the earliest, least stress route to earning 100K in finance field? The least stress route, it's a clever question because actually what it belies, and it sounds flippant, but it's actually a clever question because it belies what I was thinking when I was in my 20s. Without putting it in those terms, what's the easiest, least stress route to earning, 100K and so on? And the answer I found for myself, though it might not suit you, was to be self-employed and gradually, slowly build up to that figure. And I got there. I got there before my colleagues, and then there were times in my 30s when they were then accelerated ahead, and then there were times in my 40s when I was making more. So, and obviously we haven't stayed at 100 because you increase over time and age and all the rest of it. And obviously now I'm in my late 40s and in a better position than they are, not because of income levels and asset accumulation, but because of the freedom of self-employment. I can do what I want when I want. And so wealth, your definition of wealth changes over time. In your 20s, it's, how do I get to 100K? By the time you're in your 40s, it becomes, I don't care so much about it because the income level sort of ticked off. There's only a teetotal vegetarian. How much am I going to bloody eat and drink? It becomes, well, actually, do I have the freedom to do what the hell I want? Now, they don't. I do. And you're probably not bothered about that part of it at your young age. So I'd say self-employment was right for me. How do I break into VC? There's two answers to that, whether it's venture capital, private equity, or investment banking or finance. One answer is a great answer Charlie Munger, Warren Buffett's partner, gave. Somebody asked him, how do I become a billionaire? And he said, you're too young. And the other person said, what do you mean I'm too young? I'm in my 20s. You started investing when you were 12. And he said, what I mean by you're too young is if you have to ask me, how do I become a billionaire? You shouldn't even be starting. I've got other friends who are successful, and when people ask them, how do I be successful, etc., etc., they sort of shrug their shoulders and say, if you need to ask, it's not going to happen. That's harsh, and that's not the answer I'm going to give you. So I'm going to put that to one side because there is a way of saying to yourself, well, wait a minute, if I want to do anything, why can I not come up with the answers myself? How do I break in? Why do I not look at, for instance, why am I not coming up with the answers to look at, well, where's the CVs of the people who've broken in so I can see what they're doing, what they've achieved, and compare and look at, right, can I get into that route? What if I write to them, approach those, and they're on LinkedIn, for instance? What about efinancialcareers.com? That must tell me what they look for and to break into that sphere. And I know these people write about it in Harvard Business Review or wherever else venture capitalists might be writing about their careers and how they got into it. And I know they give their biogs on those venture capital websites or private equity or investment banking, how they broke into it. And I know people who've got in recruitment fairs and online videos tell others, this is how I broke in. Okay, so all of a sudden you've got 15 new ideas on how do you break in. The other answer is that I tell you exactly what I've told you. Why don't you do what I've just said? Look at those routes of people who've got in, and they should give you a good idea of how to break into those areas. That's one thing, but what are the outlier ideas? What's the clever, really smart stuff? And I'd probably say write to the heads of the firms that you want to work at, all of them, whether it's a Sequoia or a Barclays or whatever else, find their details, write to them and say, I want to do an internship with you. Some will send you to their human resources department, but others might be small and nimble enough that the person can say, wow, this guy really gives a damn because he's written to me. Yeah, okay, come and work with me. So that's probably an outlier answer, a more unusual answer than the conventional things you will already, I am sure, have thought of. Okay. And do follow me, guys. Those watching this, do follow me for more, whether it's career tips or whether you're looking at your pensions, SIPs and ISAs. And the top advice I'd give all of you is if you don't have enough money to start investing, at least start learning about investing. So when the money comes in, at least you know what to do. Because if you can get your money working harder for you, then you won't need to work as hard and you'll have more freedom. And the older you get, the more important freedom becomes. And it becomes more important than anything eventually. That freedom to do what the hell you want. Don't go looking for it in your 20s, thinking, oh, why can't I be on a beach in Bali whenever I want? Alpesh can, how come I can't? Well, you're in your freaking 20s, that's why. You know, you've got to pay your dues. That's why. Oh, thank you. I'm glad you liked it. What's my opinion on Ray Dalio? Yeah, he's the real deal. I mean, the guy's a legend. He's more talented than I am. I wish I was as clever and as talented as him. It's something you come to terms with as you get older and more secure in yourself. They mentored and advised by some people who have been better than me. I'll tell you what one of my mentors said to me, and he happened to be an investor in my hedge fund, and he happens to be the founder of New Look, the clothing company. And he said the secret to his success was always hiring people cleverer than him. And I've always looked to do that. I've always looked to pick people at whatever it is who are better than me at doing whatever I need to be done. And that, I think, is a good rule. Ray Dalio is somebody who's better than me at a lot of things. I'm sure I'm better than him at something. God knows, maybe chess. I don't know. Maybe eating. But yeah, there's another chap, Hilton Nathanson, who co-founded a hedge fund with a business partner of mine, hedge fund called Marble Bar Asset Management. But at the same time, he was starting up a wealth management business and a brokerage. And I remember thinking in my 30s, and we had a business partnership together, Hilton and I remember thinking at the time, I could not do that. I am not that good. You come to terms with it. Or as Clint Eastwood was to say, you're all too young to know Clint Eastwood Western movies. But as he used to say, as Dirty Harry, a man's got to know his limitations. And that's good, to know your limitations. Any other questions on finance, SIPs, ISAs, anything else? Let me know. One new message, and then I better go and do some work. I hold a scholarship to study at Warwick. Oh, no, that's gone. Break. I'm an investment analyst. Can I work for you? We're not hiring at the moment because we're deciding whether or not to do another fund. We've got several funds in private equity and in asset management. In sort of the hedge fund side is more managed accounts. And I'm deciding whether or not to do one. So about 2 years ago, we were debating to do a SPAC, and then SPACs blew up and everybody's done it and we're too late to the party. And the reason we're debating whether to do a new fund or not is this. I hate capital raising. I hate raising money, going around. And it's really funny because I was listening to an old video from Charlie Munger. There are a few people worth listening, by the way, top tip. Few people worth listening to, and you can find them on YouTube and they're free. Charlie Munger, worth listening to always. Okay, he's Warren Buffett's partner. Warren Buffett, worth listening to always. Okay. The Stoics. If you put Stoics into YouTube, always useful. Most of you will be young. You have not had problems yet in your life, hopefully. And hopefully, may God willing, you never will. But there might come times when you do, and it might be, I don't know, girlfriend, boyfriend problems. It might be work problems. It might be some boss who's an arse. It could be anything. It could be parental problems. The Stoics will really help in that and help you mentally as well. Okay, but yeah, few people worth listening to, and they're on there. Marcus Aurelius on the Stoics. Can I ask you directly, how much are you worth? Well, my mum says I'm priceless. I have no idea what I'm worth. No idea at all. I don't. I mean, if I were to ask you how much you're worth, you might say, "Oh, well, actually, in my bank account, I've got, I don't know, £10.50." I don't know. I don't count it. My the only person who knows. The only calculation you need to have is how much tax do you owe. So my accountant can say how much tax I owe, but that's not the same as worth, because worth presumably is if I had a fire sale and I had to sell everything, including this shirt and that phone. God knows. I don't know. I haven't got an idea. Equally, it's like valuing a company, and I'm going to do it on a. Somebody once asked. I think it was Benjamin Franklin. So you've discovered electricity, but what use is it? And he said, well, madam, what use is a newborn child? So it's the discount cash flow method of worth. I'm going to value myself based on what I hope I'll be worth in 10 years. So if I discount that to today's value, I'm to the moon. Honestly, as I get older, it's funny. I joked once on TikTok. Well, it wasn't a joke, it was serious. That's my watch. Look at how rich I am. Look at that watch. I'm flexing there. Look at how rich I am. Look. You just become less. A friend of mine put it this way. He used to work at Barclays. He made a shed load of money once he left Barclays and set up his own business in digital marketing. Speaking of which, look at Martin Sorrell's company, S4, I think it's called. digital marketing is just going through the roof. These guys are making so much money. And if you're finding it hard to find a job at the moment, look at Crowdcube, which companies are getting funded, and look at digital marketing companies like S4. Jeez. So this guy got into digital marketing, what's called marketing arbitrage, where you buy space wholesale and sell it. Anyway, I don't understand it, but anyway, he did it. And he turned to me and he said, "Do you know what, Arpajon?" It was within a year. He'd gone from credit card debt to making about $1 million a month, which is ridiculous to go from 0 to $1 million a month. And he said to me, he's a friend of mine. He lives in Dubai. He's British, Indian. And he said to me, he said, "Do you know the funny thing? All the things I thought I wanted, now that I can afford them, I'm just not bothered. I don't want them." It's really weird. He had that hunger, and he did. That being said, he did buy one thing. He bought a Rolex because he really wanted a Rolex, and that's fine if you really wanted it. But if you looked at him, you would not know. In most rooms, he was the richest bloke in the room. And I found that with most people, in the hedge fund industry, you get surrounded by the way, I was born in Leeds, no silver spoon in my mouth. But when we're raising funds and, the things we get invited to, Rothschilds are our bankers. So guess what? You're going to invite to a lot of stuff where there's stupid money in the room. The money in the room is usually the guy at the back who's walked in with a carrier bag and a ripped shirt and really bad shoes. It's usually not the guy in bling in the front row with the perfect tie and everything else, in my experience. Anyway, there's a funny thing about as you accumulate capital and what you realize becomes important. Thoughts on penny stocks. I used to buy and sell penny stocks in the late 80s. Because I wanted that extra risk-reward ratio. I don't do it. I haven't done it for ages. We are doing research. We have a division. I say a division. That sounds grand. Within the company, which is our sort of 10x unit, and we stole that name from Google. Google has something called Google X, which is to look for R&D. 10% of their time is devoted to R&D on things which might go to the moon. So we have a 10x division, and part of that is looking at some of the penny shares, looking at new IPOs. To see if there's a pattern amongst things which go to the moon. And we're continuing to do that research. If anything amazing comes out, I'll share it on my Telegram channel, and the links are on the bio, and it's free to be on my Telegram channel. But as you can imagine with research, it's like trying to find a drug. It's very difficult. I don't mean a drug that you can find on the... You know what I mean, drug research and pharmaceuticals. Do I play chess? I do. Do I have a rating? No, I don't think I'm that good. I'll tell you a funny story, and my wife thinks this speaks volumes about me. When I was about 9-10 years old, I knew I was good at chess. So I devised a chess competition at school, and I put the second best chess player in the school in the bottom half of the table. It's a competition like World Cup, knockout. So I'd meet him in the final, and I did. And then the final would be best of 3, just in case I messed up. And I won, and I put champion. And she said, "You know what? That says volumes about you. There's something wrong with you. If at the age of 10 you were thinking how you could publicize that you're good at something, there's something wrong with you." And she's probably right, actually. And the rest of my family agrees. They're very shy and retiring, and there's me with a TV show on Bloomberg and do my BBC stuff and everything else. So clearly there's something wrong. But yeah, I do play chess, and that's a chess story for you. How long do you think the red will continue? The red? You mean in the markets? It's going through a phase where people are taking profits. Things have gone up so quickly that they're taking profits. So I'm just keeping an eye on a few other things as well. I better run. There's so many great questions you've asked me, and look at the links in my bio. Do follow. Look at the links in the bio. There's a lot of free resources I've put on there. All those books I've pretty much converted into videos, because the thing about when you write things, you want people to have them, as a legacy. Ask your parents. They're always nagging you with advice because they want to pass something on. So I convert it into a lot of videos, and they're all on the links in the bio as well. Okay, guys, apologies I have to leave. I'd love to continue talking to you because you've got some fantastic, phenomenal questions. Oh, okay, one more. How do you think firms move their money in currency trading? I don't quite understand the question. How do I think they move them in currency trading? From account to account. I mean, it's the way you move it. From, let's say I'm paying, I've got staff in the Philippines, for instance. If I'm paying them, I wire it to their bank account, from my bank to their bank account. The idea is eventually they'll do it through, say, a Ripple, because it'll be quicker. and secure. But it's the language that's different from the coin. Okay, how thoughts on Singapore economy? I'm usually in Singapore once a year looking for outstanding technology companies, and I've sadly not been there because of COVID. So I've not had a look at their local economy recently, but it seems to be geographically very well positioned to benefit from India on one side and China and Southeast Asia, South Korea, and the growth of those regions. So it seems a well diversified place and a phenomenal place to live. I've got a lot of friends there. And so it's one of the few places where, if you said to a Brit, you've got to move, Singapore, New York, yeah, okay. You say Frankfurt, they'll shoot themselves. But yeah, Singapore has that benefit of just, and again, credit to the British, just like Hong Kong. There are certain places the British went to which, those places have, and Singapore being one of them, there were pros and cons, but that was one of the pros. It's just got this lovely colonial feel to it on the upside. Okay, I better go on that note before I get into trouble about imperialism or anything. Thank you all very, very much for that. Do look at the links in the bio for more. I'll try and do more lives. I just had an opening in my calendar, and it's now 1:00, so I'm 4 minutes behind on something that I've got to join. Thanks, guys. Thank you all very, very, very much.